Gold traders slid on Monday, essentially following up on the downtrend that was carried out in the past week. It is evident that some of the economic developments in the past week had affected traders, leading gold's price course into a sell-off. In this report, we will identify and bring to light the key topics moving the gold market, allowing us to perform a brief and useful outlook for traders to work with. As a closing, our technical analysis will assist traders with specific price levels to keep in mind. My name is XAUUSD, and this is the IronFX Gold Report for the 26th of April. We commence with a very notable strength of the greenback in the past week. The greenback surged across the board and may have acted as a solid antagonistic movement for gold's price. The two instruments have traditionally kept an antagonistic nature and moved in opposite direction, but not always. The USD index has moved higher for the past 3 consecutive weeks and has moved to a new 2-year high in the current week so far. So the question here is, what is driving the USD higher? First, market participants are seeing evidence that the Fed is probably about to move in a more aggressive stance with its interest rate. And in the past week, during the IMF meeting, FOMC Chairman Jerome Powell hinted for a double rate hike being on the table in the upcoming Fed meeting. A matter that continues to hold bullish possibilities for gold traders are the ongoing Russian military tensions in Ukraine. More money is currently thrown in the war from both sides, a reason for us to believe the situation is probably to persist. Today, a report by Reuters quoted Russian Foreign Minister Sergei Lavrov warning Western powers over elevated chances for a nuclear conflict. In such a scenario, we could see gold prices jumping abruptly. Even headlines of consideration for the use of nuclear weapons can support gold prices. Therefore, we suggest traders pay extra attention to developments on this front. In the following days, traders have a number of important economic releases coming up that could potentially create volatility for the gold market. On the 28th of April, we get the US GDP advance rate and the core PCE prices advance rate both for the first quarter, while the weekly initial jobless claims figure is also to be released. On the 29th of April, we get the consumption adjusted rate for March and the final University of Michigan economic sentiment figure for April. On the 2nd of May, we get the important ISM manufacturing PMI figure and the final manufacturing PMI, both for April. We move now to our gold technical analysis. Please note this is gold's daily chart. Gold's recent downward trend has led to 2 important technical outcomes from our point of view. First, the precious metal has fallen below the range between the R3 1980 and the R1 1920 it has been trading within since the 14th of March. And second, it has tested the S1 1895 support, which was a very notable support so far in 2022. In the scenario of a rebound higher, we see gold moving towards the R1 1920 resistance level. Higher, the R2 1950 could be engaged if the buying is extended, while the R3 1980 can be used as a buying barometer due to it being the highest level tested in April. If the selling is extended, we could see a breach below the S1, probably making way for the S2 1875 to come into play. If the sellers dominate the scene, we could even consider the S3 1850 line, which was previously used in January and in February as both a resistance and a support. The RSI indicator below our chart has fallen to the 36 level, yet seems to rebound in the most recent sessions. If the RSI indicator moves towards the 50 level, we could be seeing some stabilization prevailing. Our personal outlook for gold remains sideways, while a clear breach below the S1 could signal a bearish sentiment.